Hello everyone and welcome to the first ever Triple B weekly video. As you can see guys, the examples and the database is still young, right? We don't have too many trades and they're basically starting from the end of February. So you can go ahead and check all of them if you're interested. But as for this video, I'm just going to start from the top, from the most recent ones, and we're going to make our way down to wherever we decide to stop. So let's see what do we have in this table. But first of all, where can you find this? Well, if you go to the Forex Triple B website, scroll down and you'll be able to see this table. All right, so the first one that we have from 12th of March is on gold here. So opportunity. Let's see where and how. Just 1 second, forgot to turn on the fan. All right. So what do we have here? Gold 30-minute chart. First of all, we can check out the filters, right? With all the softwares, the first thing that we're doing, whether you're trading with manual analysis, whether you're trading with the software alone, check the filters, especially if you have higher time frame filters. See where do you stand on that. In this case, we have the 4-hour chart and the daily showing strong bearish momentum. The setting here is medium. Okay. And what we have seen before that is this ABC, which ended with divergence here on the 1-hour chart. And then we said we're expecting the price to push lower and either stop here, or if we see the breakout, we're probably going to be continuing lower. Manual analysis, regardless of what I'm saying, but back to the software, right? What is this setup based on? Well, look what happened here. Aggressive, sharp move to the downside, which stopped to this zone as mentioned before, right? We have this level. And this is where the price started consolidating. So at that stage, things start to look very, very bearish, even looking at the price action alone, without anything else. Sharp move, consolidation. We know that the overall trend is bearish. We know that the price is bouncing, first of all, broke below the daily pivot, and then it's playing right below it, holding this breakout. It is very, very logical to assume that we're likely going to experience one more push to the downside. As I mentioned earlier, this entire zone is a very strong level. And as we can see, we have the weekly pivot right in the middle of it. Okay, we have the weekly pivot, we have the daily support one right here, and we have the previous day support. So basically, this is confirming the idea that we have a very, very strong zone. Now, the one thing which I don't like in this case is in terms of risk reward ratio, meaning that if for some reason the price does this and bounces off of these levels, you will be missing out on this sell, right? Unless you push this to break even, the stop loss to break even, there is a good chance you're going to end up with a loss. What does that mean? It means that your stop loss, your target level is right below this zone right here. And this is not good. Usually you want your target to be slightly above it, right? Maximum at the middle of it, not below it. In this case, we can get away with that because this is the entire zone, the entire level, right? That's why. And when we look at it from the bigger perspective, price action, okay, price action itself, we see that now the stop loss is in the middle of that box. So what I'm trying to say is if the price action was something like this, okay, and those levels are kind of at the bottom of it, this would be unacceptable target level. Okay, it would be like having your target somewhere around here. I'm not saying it's not going to be reached. I'm just saying it will be much more aggressive, right? All right, that's about gold. Pushed lower, target reached. Aussie Kiwi for the buys. Now here we have a pretty nasty situation. I mean, you can see this is a lot of consolidation taking, I don't know, like 2 days approximately, starting from here to here, or 1 day. But this is only the 15-minute chart. When we take a look at the higher time frames, we see that 1 hour chart, 4 hour charts are showing bullish momentum, which means on the higher time frames, we are in some kind of consolidation at the moment. Okay, and this is why it's important to have a clear understanding of what's happening on the higher time frames. Because if you open the 15-minute chart alone and you look at this kind of price action, I'm definitely not going to be trading it, right? But if the context on the higher time frames is suggesting continuation higher, we can actually use this thing as a starting point to look for entries. So combining that and saying that, we can see that after all these attempts for the price to continue lower below this zone, let's say, right, which is somewhere in the middle of the range, after this bounce, support one reached more or less, we're going and looking for the entries. Now, if you start looking from the very beginning, like push, right, then you have the next one, and then you have the next one, which should be where here, I guess. No, then you have this one, because this is higher on that candle. You see that it will not be triggered, which is really interesting. I mean, when you look at it like this, it looks like, oh my God, it's so choppy. But in reality, if we follow up on these signals every time the price is going inside the band, right? And if assuming that this is confirmed, it will not be triggered. The only trigger would be right here, which is kind of cool, at least for me. I find this pretty cool. Then that's pretty much the idea here, right? Rejecting, testing S1, pivot, breaking above the most recent fractal, and we are looking for potential buys. Since we're protecting much below, like 10 pips or so below, this triple bottom here didn't really do much. I mean, even if you're protecting it here, I'm not sure if it would be reaching it. It would be close, but you also have the daily and this pivot, so it makes sense somehow to protect this zone, right? And you can see that the price is respecting it absolutely perfect. All right, well, let's see Bitcoin, which was kind of classical situation. Well, given the overall sentiment, we know that Bitcoin is for buys and bullish, at least until it isn't. But at that moment it is. And since this is the 15-minute chart, we're looking at H1 and H4. And pretty similar situation. Ever since we got this push up, the pullbacks, you can see that you're not getting triggered here, okay? Very nicely following the pullback, or what you're expecting to be a pullback, right? You never know until you actually see the target closed, the trade closed. It could be very well going downwards. But this is absolutely amazing, right? The combination between the two, it's really fascinating. So we have the higher time frames bullish. We do have the daily support here. We do have the weekly and the daily pivots. So if anything, and you want to be actually looking for more conservative, in this case, I wouldn't think it's necessary, but if you're looking for something more conservative, this is the next zone below. And that level, along with that zone, would be kind of the zone for the protection, right? Not even here, somewhere around here. That was a false break clearing stops. In this case, why I wouldn't recommend it? Very simple, because this move is huge, okay? If it was breaking right here and that was the actual setup, okay, then I might be considering a possible deeper protection. But since the price is moving so aggressively to the upside, at least in my opinion, protecting the previous swing makes a lot of sense. So in terms of gold, well, it's pretty much pushed straight to the upside. Another thing we should be mentioning here is in terms of the targets, okay? Just step back. And I keep on saying this in every single video, but anytime you're looking for pullback and continuation in the given direction, in this case, this is an uptrend, you want to make sure your target is slightly below, I mean, close as possible to the previous swing, right? You want to enjoy this entire ride, if you're correct, but also you don't want to place it above, because in situations when you have levels and this swing, this kind of target right here, even though this is absolutely squeezed, the only way for you to improve this, the stop loss is already at its best, right? Protecting the price action, even not the daily support. The only way to improve here is to wait for pullback. Okay, you cannot improve anymore the risk reward using the risk reward and moving it. The only way is to improve the actual entry. So not during the breakout, you need to wait for pullbacks. Back to the point, when you have swings plus this kind of levels, weekly, daily supports, etc., you might be actually cashing out around this zone, or at least moving the stop loss if you have. Let's see if we have lows here. One moment. No, we don't. So you can see what's happening here, right? Daily swing, the price is coming here and bouncing. So if you're around the PC, you might be very well also cashing out a few pips below that, just in case, because that might be pushing lower. And if you move the stop loss to break even, okay, as we don't have any logical low to protect here, right? So let's say if your target is somewhere around here and you see this kind of move, then you have a new low to work with. Before that, you don't have it. So the thing would be to move the stop loss to break even. But in some cases, you will be kicked out. In this case, not really, right? We can see it would be surviving. But I don't know. I mean, it's all about how you would like to manage your positions and what kind of techniques, what kind of tools you have at your disposal. Sorry. But I think this is super important and critical to be mentioned. The previous swings with the levels and the targets, always keep that in mind when possible. I mean, it's not a deal breaker if your target should be here, right? Because if you're trading 1 to 3, 1 to 2 kind of system, unless your pullback is something like this next to the 80%, there is no way you're going to get 1 to 3, right? So again, I'm not saying it's a deal breaker. Just keep in mind these levels are usually the place where the price is reacting, right? So if you have multi-target kind of strategy or anything like that, it might be a good place to consider management. That's all. Okay, let's do one more. Euro yen lost one. Let me see. Euro cut. Well, here it was pretty straightforward. Absolutely bearish. I mean, you can see the Bollinger Band, the only place where we broke the conditions was right here. During all that time, it's absolutely bearish, right? And this last wave right here, we got the first touch, the second touch, and the third touch. This is the place where we actually got the trigger. On the 4-hour chart, this is the 4-hour chart MACD. We don't see any divergence against. Actually, we see bearish hidden divergence, which is supporting the bearish continuation. Kind of consolidation happening here after this one push up, which means if this thing lost, right, and we got deeper push up, that could be still tradable. I'm just mentioning that as a possible scenario. But besides that, levels are pretty clear. I mean, even without the lines here, we can see where the level is, and we're kind of respecting that zone. And the attempt here would be to look for sells, right? All right, Euro yen last one, and we're good to go. So here we're looking for the buys, filters suggesting up. Again, we have, at least in my opinion, on the lower time frame, this is some kind of sideways move. We bounced from the bottom, starting to push to the upside. Some people might be looking at waves already if you're doing that. But the idea is that here we have the touch point, okay? And we got the breakout. So you might be even protecting it a bit more aggressively, if you will, because look at all these levels. You have this one. Here it would be a bit trickier. I wouldn't use it. This is above. And here we have this one as well. So that would be below it right here on the next part. But pretty much we can say that this is a level, right? Starting from here up to here, this is a level. So if we have a bounce from this zone and the price is breaking above, creating new highs, you can be actually protecting it a bit more aggressively, right? Again, it depends on the tolerance, it depends on the trading style. For some, it would be too much. For some, here would be the most logical protection, and then looking for some targets much, much higher. It really depends, but always make sure to check out the levels. This is the important part. If you have a good critical level above or below, you can definitely use it as protection or as a target. So right here, again, in terms of the targets, that would be the zone. You also have daily resistance 1, and this is also the top of the range. In other words, if you're looking for buys, this zone right here, in my opinion, should be considered for some kind of management because otherwise you see what's happening. Okay, we enter the level, we enter the zone, daily resistance reached, and then you have this push lower. And you can see that at this moment right here, I think the protection on this one was around here, right? At this moment, you don't have a logical move, right? The only thing you can do is move the stop loss to here, which is not little in terms of shrinking and rejecting the risk here. Not shrinking, not rejecting. Come on. What's the word? Lowering the risk, lowering the exposure. Okay, because from X pips, you're now minus Y here, right? If this is Y. And I think this is approximately 30% decrease of the risk in terms of pips. So that's not bad at all, not bad at all, but it's not completely taking the risk off. Okay, you don't have a move, that's the thing. if you move it too close, you're kind of risking to choke your trade. So always try to think these things through, and if it makes sense, go for it. If it doesn't make sense, skip it, wait for the next one. But again, I mean, if we all saw the same thing and traded the same setups, there will be no market. So there will be definitely differences in the way how we see the market, how we analyze the market, and how we trade the market. All right, that would be all. If you have any questions, guys, ping us in the Telegram groups or leave us a comment below and we'll be happy to reply. Thank you all.